Yep, thank you. Good. Thank goodness for somebody helping. So thanks very much to 1 to 1 to come do the corporatization. I have 10 minutes. I can barely get through my name in 10 minutes, so I'm going to go quick. I won't go through this slide. Basically, we are a producing company, 2 silver mines in production, polymetallic, more base metals than silver right now, as a result of a conscious decision at our board and our management level to keep the silver in the ground for a better silver price. And so the company has been producing out of our Galena complex in Idaho and our coastal operations in Mexico. And we're going to produce about 1.5 million ounces of silver this year at about $10 to $12 all-in sustaining cost, make a little bit of money. I think the best story about the company, or the most important story, is we're very high growth on a per share basis. We're going to grow our precious metal production between 2018 and 2020 by nearly 500% as we bring the Relief Canyon gold mine on this year. We expect to be producing out of the asset this year a very small amount of gold before year end, and we expect to ramp that up by the end of the first quarter 2020. We expect next year to be producing between 85 and 90,000 gold equivalent ounces, so gold and silver as gold ounces at less than $800 all-in sustaining costs. So as we talk around, we just heard about how do people get valued in this industry. It's by producing, it's by executing, and it's by delivering free cash flow. And so that mine on its own will deliver about $40 million of free cash flow next year. So we're very excited about getting it up and running. The asset was started, the construction was started April 3rd when we announced it, and we'll be producing gold by the end of the year. The first gold pour, we'll get some cufflinks and a few nice areas. It won't be a huge gold pour, but again, by March we'll be producing 2020 doré bars. We had a 250% increase in our gold equivalent reserves. So gold and silver over previous gold and silver from the prior year. A lot of that was acquiring Pershing Gold to get the Relief Canyon asset, but on a per share basis, we're up 100% on our reserves, our silver and gold reserves year over year. So when you take into account the acquisition of the shares, we're fully funded to commercial production on Relief. And again, the mine is expected to create an immense amount of free cash flow for a company of our size. We trade almost 1 million shares a day between the 2 exchanges. And we have seen that come from about 300,000 ounces a day of liquidity in January to almost 1.5 million through the good gold prices in August and down to about 1 million today. Share ownership, 3 largest shareholders, Eric Sprott, Pierre Lassonde, and Sandstorm Royalties. They represent about 19% of the shareholder base of the company. You can see we've got 82.6 million shares. So as we generate close to $50 million in free cash flow next year on a per share basis, that's going to be very impressive value. I just want to note that this is a Canadian share price, not a U.S. share price, and I apologize for that. Depends where we're marketing in Canada, the United States, but our share price today is about 370 Canadian or about $3 US, just 290, and our market cap you can see there. You can see our gold reserves, proven and probable, silver, lead, zinc, and copper. We have many resources. It depends on how you want to look at it. We have over 4 million ounces in our categories of gold equivalent, or over 400 million of silver equivalent if you take all of them into place. We have about 50% retail shareholders. That's a result of doing the Pershing deal. They were all retail. And Pershing had a shareholder named Barry Honing who owned 44% of the company, who had some challenges with the SEC. I can tell you he became 14% of the new company, and he's now less than 3% shareholder. We have traded his stock out. He cannot trade his shares until April 2020, but we've moved them into large institutions to get Barry out of the stock, as he was a challenge for Pershing. And we've managed to not only increase our share volume, but move his 10 million shares out of his hands into long-term shareholders. Why did we do the Pershing deal? Very simply, you can see that in 2018, we had about 55% of our reserves in silver and 45% in base metals. And yet in 2018, we only produced 22% silver revenue. That was because, again, we couldn't make money on silver, so why would we produce silver when we can't make money? We left it in the ground, and we produced more lead and zinc. You can see as Pershing really did 3 things. We bought a high-value project, a 95% IRR project at $1,290, and obviously much higher now that gold has gone up. And so we've got a good project. It allowed us to change our revenue from about that 22% silver gold to 66% next year. And we don't have to bring on our high-grade silver and our increased silver production until we see higher silver prices. So really 3 advantages. It's very important, but it re-rates us on a reserve and a production basis again properly as a gold and silver company. Just as we talk about valuation, we want to shoot for the best companies in our industry. And when we look across companies, we see 3 that really are very close to us as far as producing in Canada, the United States, or Mexico, producing around that 100 to 150,000 gold equivalent ounces. So we have Wesdome, McEwen Mining, and Premier up there as a comparison for us. If you look at analyst expectations of those companies against analyst expectations of our companies, or our company, you can see that we are very favorable on an operating cash flow and a free cash flow basis compared to those companies. We produce around the same amount of production, but very good operating cash flow and very strong free cash flow, and yet you see our valuation is quite low compared to theirs. That's a result of the fact that the mine is just getting into production, so we see a strong re-rate for the company as the mine goes into production between December and March. And again, expectation for commercial production and full production is in the second quarter, so commercial production by the end of the first quarter. So we're excited about that. We're prepared to move forward. I don't want to talk too much about Relief other than, it's about 700,000 ounces of gold. There's been little to no exploration drilling on the property, 27,000 acres. And we have a lot of work to do, and we think we're going to discover a lot more gold. Right now, the focus is getting the mine up and running and getting it into commercial production and getting that free cash flow, and then we'll use that free cash flow to continue to do more exploration work. See some pictures here. And as I said, the mine, we only made the announcement on April the 3rd, and the mine, again, will pour gold by the end of the year. Our coastal operations are in Sinaloa. I say Sinaloa, people cringe because they've watched Netflix. I can tell you it's a very different world depending on we're near the tomato agriculture. In Mexico, I drive myself from the Mazatlan airport to the mine. This is a mine that has over 10 years of reserves right now, and this is a very interesting chart. We have low-grade silver in the blue on the bottom left with high-grade zinc and lead. That's where we've been producing. So we produce about 50 grams silver here, but the upper zone, which is the purple area, is 330 grams silver. So we can bring on that high-grade silver and increase our silver production within about 3 months. And we've been waiting, and although silver price has gone from 15 to 17, we still think it has a long way to go. So we're producing 600,000 ounces out of this mine this year, and we can be producing more than 2.2 million ounces when we bring the upper zone in. And so we've been waiting, we've been making money on lead and zinc, but we want to be able to bring growth on the silver side when silver's going up, not when it's at what we think is a very low price. And then we've got, that's the one asset in blue and green, or in blue and purple, and then our secondary asset, EC120, which comes in about 4.5 years from now. After this asset is a silver copper asset that will produce 2.5 million ounces. So we're going to have about 2 to 2.5 million ounces of production coming out of this region for the next 10 years. And it's only the tip of the iceberg, as there's over 42 high-grade starter pits that were mined during the Second World War for the U.S. government. And there were 46, and 4 of them become mines. And we think we have 19 exploration targets here. So that means 1 minute? Okay, good. And last one is our Galena operations. Idaho is an excellent place to operate. The only challenge we have here is that it's very expensive from a labor perspective. In Mexico, 23% of your costs are labor. In Idaho, for us, in the U.S., generally it's 65%. So you need to have a better mine. We just announced a joint venture with Eric Sprott, where he became a 40% owner of this mine. He loves the jurisdiction, he loves the mine, but it will only work at higher silver prices. So Eric's committing $20 million to recapitalize this asset over the next 18 months, which we believe will bring it out and we'll be able to produce 2.5 times more production at half the costs. And we're very excited about it. And with that, I will just say that we have increasing gold exposure, leading precious metal growth per share. Our low-cost operations are in the second quartile, and we're all based in North America. And we're very focused on execution risk, and we don't have any event risk. That's it. Thank you.